Hello traders. Alright, so if I told you right now that it's very easy for you to flip accounts every week, okay, either you double them or triple them, or I don't know what I don't know if force them or I don't know what to say, but if I told you that you can definitely grow your account every week, most of you are going to say that is too good to be true. Okay, and I want you to hold on to that thought. I want you to hold on to that thought, because if I was just a beginner, I just started trading, or maybe I've been trading and I've just been unprofitable, I would say the same thing. Okay, so this is not a bullshit strategy that you just come and then just take on random shapes or random trends or random patterns. No, this has nothing to do with it. And I'm talking to people that trade synthetic indices and currencies. All right, because those are the two things that I trade. I don't want to talk about gold or USDT or any of that. All right, I'm talking about these two because those are the things. I'm talking about things that I've experienced. All right, so I don't want to talk about things I have never traded. Yeah. So the only things that you need from this strategy, guys, is going to be the day's opening price. That is the first thing, not the only thing. That is the first thing that you are going to need. And when I say day's opening price, I'm talking about the daily chart. So when I'm talking about the daily chart, this candle, right, this big thing that you see right here is representing a daily candle. Okay, now in this instance, we are going to assume that we have a daily bullish bias. Price is bullish, okay, on the daily chart. That's what I mean. So if you don't know the daily bias, there's plenty. You don't have to watch my videos. If you find a good video anywhere else, you can just watch it and then come back to this. Okay, otherwise I've made a lot of videos about daily bias. Okay, so with this candle right here, when we already know that price is bullish on the daily chart, first you are going to need these two things, the previous day's high and opening price. So what I mean by that is, let's say this was Monday and we are on Tuesday. If today is Tuesday, this is Tuesday's opening price. Okay, you can see this is a bullish candle, meaning it closed right here. So if yesterday price closed there, if price was closing, let's say people have different time zones, all right, so let's just say midnight so that it's more neutral. Let's just say midnight. This is price closing. Okay, so another candle needs to open. Now that candle is going to have other lower time frames, and that is where we need to have a point of interest. So that is the other thing that you need, a point of interest. Now with this point of interest, I want you to start looking for that point of interest, okay, with 15 minutes, 30 minutes, or 1 hour. Just those three time frames. Okay, point of interest, you look for it on the 15 minutes, 15 minutes, 30 minutes, or 1 hour. Okay, one of those three will suffice. So what you need from those is, let's say we are looking at the 15-minute chart because that's what I mostly use. I only tend to go further up when I'm trying to look for extra confirmation. Okay, so when 15 minutes, on 15 minutes price opens, okay, that is how price moves. All right, so what we are looking for here, this is price playing around the opening price. Okay, this is the market playing around the opening price. So what I look for as a point of interest, I look for two things. Okay, it's either the fair value gap or the single candle order block. The first one, the most important one that I look for is a single candle. If I have a single candle order block on my 15-minute time frame, I have to go all the way down and look for an entry setup. I'm really giving you these things for free, all right? This is what you need to be doing. So when price is moving like that, okay, most of you are going to be saying in your minds, no, price is running away from me. I need to catch this buy. So what's going to happen is you are going to start looking for areas that you are not supposed to be looking at because you don't have any patience. So since I said we are talking to synthetic index traders and currency traders, if you're a currency trader, it's even easier for you because you are just looking at trading sessions. Okay, trading sessions. I'm talking about London and New York session. Okay, it's easier for you. You can avoid all this and then start looking for an entry when those periods come. All right, for synthetic index traders, it's going to be a bit tricky, but it's very straightforward. All you need to do is set alerts. An alert, I already have a video on how you can set alerts. Okay, if you don't understand that video, you can watch other videos. If you still don't understand there, we have mentorship, we have signal groups. Yeah, people have already, it's a really straightforward thing. Yeah, it's the easiest thing that you can do. Yeah, so when prices drop into the downside like that, okay, so like I said, I'm looking for a single candle order block. Again, if you don't know a single candle order block, please try to do a little bit of research. This material is on YouTube for free. Okay, if you still don't understand there, yeah, the links are in the description. Otherwise, a single candle or now this is not the only thing that you are looking for. Okay, this is not like a 1 + 1 = 2 thing that you can. Yeah, there's also something that we call liquidity in the market. Okay, if you don't understand that, you are going to get killed. You are going to be used as our source of income, in short. All right, so just because you see a single candle order block doesn't mean, yeah, you can just enter. So there's something that we call internal range, external range liquidity, external range to internal range liquidity. So it's not just every time you see this you can just enter. Okay, so I'm just giving you the basics right now. So when price is moving like that, okay, sometimes let's say maybe you already entered, you don't know much about internal range to external range liquidity, which is fine. A lot of people don't know that. Okay, and then all of a sudden you see price making equal lows like that. Please just get out of that trade. Okay, and wait for price to finish its liquidity build up and the liquidity sweep. Okay, because what happens is, for price to really expand or go to where it's going, it needs a lot of traders to lose their money so that it just becomes a free price movement. Okay, after taking out a lot of traders. So when it's moving like that and then take out whatever was lying on these equal lows, okay, this is where you especially when you're a synthetic index trader and then you were not looking at the market for that long, but you already put your alert here that, okay, when price takes out this liquidity, I need to start looking at the market and start waiting for that point of interest. So I'm telling you, it's not even going to take that much long, okay, since liquidity is already swept. So when you have that single candle order block like that, after price sweeps liquidity, this gives you some sort of edge, or it's like a signal. Okay, Like, okay, so price before making this point of interest, it did what? It swept sell side liquidity here. Also, there's another, this is a fair value gap just here. Okay, there's a fair value gap just here. So there's also inverse fair value gaps and all that. Yeah, you can watch videos on. Otherwise, it's just an indication that price wants to go to the upside. Otherwise, just concentrate on this single candle order block right here. Okay, so that when price comes back to that, on the lower we said in the beginning that we are looking at the 15-minute time frame. So when you are looking for that entry point, just make sure you go all the way down to 1 minute. You can choose 1 minute to 5 minutes. It doesn't need to be more than that. Okay, but when you're looking at the 15-minute chart, please just look at the 1 minute. Okay, just look at the 1 minute. When you're looking at the 30, if your POI this is 30 minutes, yes, you can look at 1 minute to at least 3 minutes. Okay, when you're looking at the 1 hour point of interest, you can look at the 1 minute to 5 minutes. You never go above 5 minutes if you really want your risk management to be top notch. All right, so under there, you can see how easy it just went through. Okay, so this scenario that I gave you right here, this is what you need to expect. Okay, this is why I said, please do not enter just direct on your analysis time frame, which is 15 minutes here. Okay, the reason is that you are going to lose more than you should. All right, when price is taking out liquidity, in most cases it's going to be sweeping like this without the bodies closing below. Okay, so just wait for another single candle order block. All right, so if you were given, so this is why the entry setups are really important. In this single candle order block, you have to look at this candle the way it was coming. Do you think the way this black candle came in, do you think you would have been given an entry setup on the 1 minute chart? No. Okay, you can tell from the way it formed. Okay, unless you had a big wick here and then price went up and then came down, yes, then we are going to have an entry setup. So that's why entry setups, it gives you time to avoid unnecessary entries. All right, so when we move on, okay, so we have another single candle order block. Now, what's the difference between this single candle order block and the other one? The difference here is this other one, when it formed, confirmed by this big candle, you can see it went all the way above that swing high there. Okay, so what you have here are two things. First of all, on the analysis chart, which is 15 minutes, you have a market structure shift. And then price left a single candle order block right here. All right, so that is when it comes to confluence, it's giving you extra confirmations. All right, but you still don't need to just go direct and then enter. You don't need to go direct just here. You still need to go on the lower time frames. Okay, you still need to go down to the lower time frames when price comes down like this. All right, when you have an entry, then you can let, so when you have an entry, these your stop loss is not going to be all the way down here. Okay, your stop loss is going to be based on that entry time frame, which is 1 minute. All right, so when price start moving, the opening price is going to be one of your targets always. Okay, it's going to be one of your targets. Also, just keep in mind that you already have another swing high there. So when it comes to swing highs, for me, I consider them as targets, especially on the analysis time frame. So when price starts moving like that, make sure you have taken off some. Price tends to react to this opening price a lot. So you better get off some profits and then wait for price to do its thing. Okay, so when it goes all the way to the previous day's high, it's either you choose to close all the profits that you made here, or maybe you have on the on the daily chart, on the daily chart, you are still going to have external range, internal range, and that's another topic, but it's just for extra bonus. Okay, it's just for extra bonus. Otherwise, just try to stick to this. Now, this was a buying analysis and entry setup. Okay, when it comes to selling, just do this, but you are selling above the opening price. It's that straightforward, guys. Okay, let me just see if I can find an example. Let's see what's happened on the current market. There's actually something on GU, so let's see. All right, guys, so this is GU, and as you can see, price, of course, it's coming all the way from up there. This the bearish buyer started with this candle right there. Okay, but the candle I'm looking at is this main candle here, which had a lot of inside candles here. Okay, but it was taken out some 2 days ago, and then the candle that took it out made a bullish bias. So you have a candle taking out the previous candle's low and also reacting to this fair value gap down here. Okay, you have this fair value gap down here from that high to that low of the candle. All right, so when you go down, I'll be using the same 15 minutes, but you can see here it's saying 1 hour single candle order block. So let's just start with that. Okay. So first things first, you have the day open and the opening price and its opening price. So like I said, from the example there, I was doing an example of you buying this market, but here we are selling. So you have to sell. I mean, we're actually buying here. Yeah, so you are buying below the opening price here. If you were selling, you are going to sell above this opening price. The selling was not going to make sense since above here, you can see this marking here. What we have is buy side liquidity. Okay, that's what we have. We have equal highs there, so price needs to go all the way up there for us to make something out of this trade. Otherwise, down here, okay, so this is what you'll be doing. You can look all the way back to the left. If there's a point of interest, try your best to look for something. So here we are talking about a currency pair. Okay, so we are looking at, this is what we are looking at. Okay, trading sessions. Go down to 15 minutes. It's going to be more visible. Okay, so when we bring in trading sessions, so this is a New York session. Okay, so during the New York session, this is where the bounce started from. All right, now the entry, of course, I like scalping on the on the what on the car on these currency pairs, and normally it's GU. Okay, down here you have, this was around 10, yeah, around 10:30 somewhere there, New York time. Okay, so you have price dropping. Now before price drops here, I want you to also pay attention here. Okay, these are not just random places where you just enter anyhow. Okay, these things right here, these are liquidity pools right here. First you have, okay, let me just draw the whole thing here where there's consolidation right here. These are liquidity pools. You have the buy side, you also have the sell side. Okay, so you have buy side and the sell side. So buy side needs to be taken out first, okay, and then sell side taken out. After that, what do you have again? Trend line liquidity right here. Okay, trend line liquidity, price dropped all the way to the downside, meaning, this is what I mean, guys. This right here is what I mean. Okay, so when you have something like that, and then price is already forming an entry setup down there, this needs to be taken out at some point. That is fuel for you who's trying to enter a trade. Okay, so down here, if you've seen my entry setups video, price dropping to the downside, okay, it dropped and then tried to go up here, okay, and then dropped, went up, dropped, went up again. Okay, so what exactly, before I even say anything, I know most of my students already know what we are looking for here. Okay, first things first, we already have market structure shift. Okay, what's the other thing that we just need? A fair value gap, guys. Okay, displacement, that's all we need. So not just displacement, in this case we also had this mitigation block right here. Okay, now these are not just areas where, okay, you see price is reacting to it and then you're okay, what is it reacting to? So you have that mitigation block, price just tapped on it twice and then started leaving. You also if you didn't see the mitigation block, you are also going to see that fair value gap right there. Okay, the displacement. All right, so that small black thing there, that's confluence, guys. That small thing there, that's where, just that area, the moment it starts, that's where you need to enter. Okay, the moment you enter, yeah, so okay, so this is on the 1 minute chart. Okay, this is on the 1 minute chart. Price has not gone that far yet. All right, but you can already see this high here. Okay, so the reason I like I like GU compared to other currencies, it really respects this thing. Okay, so this high right here, that swing high, it looks like a small move, it may look like a small movement to some of you, but that's a 1:8 risk to reward ratio. Okay, now for some of you who really don't have big accounts, this is why I advise that you start with synthetic indices. The volatility 75 1S, the original volatility 75 or volatility 25 1S. Those things are very easy to hold. Price reacts and then just start running. So it's very easy. By the time maybe you are just taking a nap, by the time you're waking up, price has already gone 100 and something pips. Okay, within a really short period of time. Yeah, we do that every time in the signal group. Otherwise, this is the strategy, guys. I don't want to give it a name. I don't want it to become a thing, but this is the strategy. Of course, we can also look at the 1 week time frame. It helps a lot. Okay, especially for swing traders, the people that really want to hold trades for way too long. All right, so right here, not all trades are out. Okay, let's just do this. Let me remove this. Okay, so we have this high. Okay, so when we go down to the 15-minute chart, okay, yeah, so I'm not talking about just hold, of course. So this opening price can also be a target. Okay, there are people that just want to hold all the way to there. So that line where I drew the previous day's high, that is where we also have buy side liquidity. Is that a coincidence or or what? Yeah, so I don't look at these things as a coincidence. It's like price telling you you have to, look at these things just the way they are. If it doesn't go all the way up there, we still have buy side liquidity. So if the other day again, if price goes like this at some point and then just go all the way down again, we are still looking at buy side liquidity there. That's actually a bigger opportunity. If you catch anything all the way down there and then price continues going all the way up there, you understand why it's going all the way up there very fast. Okay, so that is how you trade this strategy. All right, if you want to know more, you have any questions, the links are in the comments below. Otherwise, hope you have a good week. Happy trading, guys.